We have business journalist Roben Farzad with us now. All right, Roben, I wonder what you think about this projection, but also, like, can't something be a bubble and then a revolution?
You know, they say in investing, I think it was an investor who said that broken clocks can even be right twice a day. And I see that pattern with these crashnosticators who made a big name for themselves. In the case of Dr. B, it was in the '07-'08 crash, as immortalized in The Big Short. There are other people who called the crash of '87. There are people who've done various things with subprime and other bubblets we've had, or the savings and loan crisis. And they're out there blowing hard because they kind of want to revisit that glory, but very rarely do two bubbles. I don't know of any two bubbles that exactly resemble one another. I mean, it rhymes in certain respects, but we don't know how long this can go. We don't know how revolutionary it is, just as we didn't know how revolutionary Netscape was. That thing went on for 6 or 7 years, and at least 4 years after Alan Greenspan hinted that the bubble had maybe peaked. So, be very careful about even listening to the doomsdayers.
I'd never heard of a bubblet before, but I guess they do exist. Roben, I wonder what you make of the criticism that so much of the U.S. economy right now, what's being described as a growing economy, the enthusiasm on Wall Street, is predicated on these 4 or 5 AI-led companies and on the proposition that AI is going to revolutionize everything. In some respect, if it falls short of those expectations, it could be a tough time for the economy, but also if it succeeds, it's disruptive and half the country is potentially out of work. So, I mean, isn't there some concern overall for the economy ahead?
Yeah, there is. And there are investors out there who I talk to who say they're really underpricing the risk of people being put out to work and not chipping into their 401ks or maybe having to liquidate their retirement accounts. There's a lot that we don't know right now. Certainly, we've seen lots of stress in Wall Street, in professional services, in the ad industry. We know that some AI firms are getting Wall Street analysts, junior bankers, to hire their generative AI platforms. It's kind of dog eat dog out there. But I think in the meantime, there's so much enthusiasm for companies like NVIDIA and Palantir. Indeed, these big tech companies now represent, I think, almost 35% of the Standard & Poor's 500 index. So if you're just buying the broad U.S. market, you're buying by default a tech fund. And we saw the last time that happened at the turn of the century. You then had a lost decade for investors. But this has gone on for quite some time. Look, you could have called the bubble 2 years ago. We had a meme stock craze during the pandemic. It's really, really hard to call the top.
And this circular financing of AI deals, that's something that's raised eyebrows on Wall Street, Roben. Explain what that is, explain why that's creating so much concern.
Yeah, great point. Kind of the razzle dazzle. If a company like Oracle comes out and says, we just want to get on a press release with OpenAI and, let's theoretically build a power plant and promise each other this many terabits of OpenAI exchange. And, this will happen by year 2029, theoretically, notionally, and then the stocks pop massively. And when you talk about near trillion-dollar player companies, even 10% gains in market value, tens and tens of billions of dollars, you see that happen in speculative periods where people just want some of that magic to kind of dust off onto them. But you're creating more heat than light, really. Nothing is being accomplished. I mean, in Wall Street terms, these are called round-trip trades. There's no value added. It's just razzle-dazzle. And indeed, many people calling for a top and a bubble right now are pointing to exactly that as a sign of peak speculation.
Roben, we only have about 10 seconds. So if you wanted to be cautious, where are you putting your money?
There's only so much you could do. Bonds are supposed to move inverse to this. There are things that have not done as well over the last 15 years, international or small or value, but people have been, it's like crying wolf after a certain period of time. You don't want to be missing out, and it's FOMO versus true fear of losses.
Roben, always great to have you. Thank you so much.
Thank you.